Breaking news, the Florida housing market crash is canceled. All right. Today we're going to do a deep dive into the numbers. So the January numbers were just released this morning. And today I want to do a deep dive into the data that exists in the housing market, starting from a 5,000 foot overview, going down to, let's see here. All right, so I'm a little bit new to live streaming on my YouTube channel. I used to do this all the time in a Facebook group, but I think and hope that this is actually working. Nonetheless, I'm going to start from a 5,000 foot overview. I'm going to start at the state level. I'm going to go through all the numbers that exist so that you can determine for yourself whether we've got a boom, whether we've got a bust, whether we've got a crash, whether we've got a cancellation of a crash, what's actually happening. Because the truth is anybody can spin a narrative or misapply data to fit a narrative, but what do the actual numbers say? And that's what we're going to talk about right now. What's up, upstate New York? I'm watching you on my TV. It's working. Woo! Outstanding. That is what I like to hear. And thank you all for tuning in. I do appreciate it. But let's get into the numbers and less sales pitch from me. So here we go. All right, so as of this morning, January 2023 numbers are out. I am only addressing single family homes right now. That's it. That's the only product type that we are covering in this report. But this is the state, and Florida is a massive state. A lot of people don't necessarily realize that when I talk to them, but we're talking about something close to 67,000 square miles. It's a 500 foot long. Yeah, it's foot long. It's a 500 mile long state, and it's 160 miles wide. So there are many markets that exist within the state, and this data starts very generalized. It's a good idea to understand what the trends are, but it's probably completely meaningless and useful and useless to you if you're actually shopping in a certain area. So it's critical to understand what the market dynamics are wherever it is that you're thinking about buying, or if you're thinking about selling. You need to know that hyperlocal market, and the national data will be completely useless. This state data will be completely useless. You need to drill down into that hyperlocal market. And if you need help with that, we would love to help. And the fact that I am not in your state or in your city is somewhat irrelevant, because I'm connected with all-star professionals from around the country and around the world that are experts in your local market, someone that we know, like, and trust, that we have vetted and done business with before. We would be happy to introduce you. Okay, so, and then obviously if you're local here, I would love to help. But this is what it looks like in January in Florida for single family homes. Closed sales were down almost 33%, right? Big dip. Cash sales, which were paid in cash, transactions done in cash, down 35%, almost 36%. The median sales price, and I've talked a lot about this in the past, and somebody chastised me for not understanding what median means. I know exactly what it means, but I think it is not the most useful number to know when you're actually shopping or thinking about buying or selling. I think it's too skewed. The middle number in a range is maybe instructive, but it's not useful if you're actually trying to buy or sell something. Nonetheless, it was up 4% from 375 to almost 390. Average sales price uptick to 5.2%. Now, if you've been watching my content for a while, you know that I've talked about single digit growth. That's what I expect to see as we move forward throughout 2023, and until something changes. And the interesting tell here will be to see, what is the distressed sale market look like? What does it look like from a state level? What does it look like from a metro level? What does it look like in your hyperlocal market in each city? What does that distressed sale number look like? Because it only takes 10 to 15% of the overall market to be in distress to bring the market down 30%, which is exactly what we saw during the financial crisis, the great financial crisis. Are we in for a great financial crisis? in the next quarter, in the next year, or in the future. Yet to be determined. I don't know. I can talk myself into both sides of that equation, but I know there's tons of content out there trying to scare the bejesus out of you. And as a boots on the ground operator of a high performance real estate team, I work with clients all the time who think the market dynamics are different than what they actually are. So it is not unusual for us to work with clients and get them an incredible deal on a property, negotiate all the things that we couldn't have done in the past. And then they may get buyer's remorse. They may start shopping. They may start looking at other properties. And when I've seen that happen in the past, the homes that they have been looking at have sold instantly with multiple offers that bid the price higher, that were priced the right way. Because I suspect, as the numbers will, as we go through them, will confirm that we're still in a seller's market. And yes, demand has dropped off. And yes, closed sales have dropped. And yes, interest rates going higher are certainly putting a squeeze on a lot of people. But many people who are shopping in my market, and again, right now I'm talking about Florida, not my hyperlocal market, they're not rate hike sensitive. They've got money. They can buy what they want. They're going to shop a smart, great deal. And that's what's happening. So no evidence of a fire sale thus far, but let's see what the numbers look like. All right. So dollar volume dropped. Well, that makes sense because closed sales in totality dropped. And I'm hoping you can see this. I blew this up to 200%. Original median percent of original list price received. Well, in January of last year, it was 100%, and that's down 5% to 95%. Okay. Well, I don't know how much of that is a function of the market or a function of being overpriced to start with, but yes, it is factually true that you can negotiate deals in this market, and that was not the case back in January 2022. Median time to contract up 186%. Big exponential jump. Bar the door, Sally. January 2022, it took 14 days to go under contract. Today, it takes, or excuse me, not today, as of last month, January, it took 40 days. It took 85 days to close, to sell. In the past, back in January 2022, 58 days, uptick of almost 47%. Pending sales down 19%. New listings down almost 5%. Pending inventory 32,711, 711. All right, but that's down 26%. Inventory, active listings on the market in the state of Florida up 134% from almost 28,000 to a touch over 65. What does that look like in terms of months supply of inventory? Well, if 6 months or greater is a buyer's market and 6 months or lower is a seller's market, although I would argue that 4 to 5 months, well, 4 is neutral, 5 is trending to a buyer's. Where are we at from a state perspective? Well, we're still in a seller's market. It's 2.8 months, up 180%. Closed sales. Now, to be clear, I am going to cover the metro areas. I'm going to cover South Palm Beach County. I'm going to then drill down into my city and then more granularly into my hyperlocal market. But in the future, because there is so much data that came out today, I will cover all of the markets that exist within Florida, or certainly the ones that you request. So if there is a certain city, certain metro, whatever it might be, let me know, and stay tuned because I will cover that in the future. I can't cover it today. There's just too much to crush and go through right now. So closed sales, January 2023, we're down 32% relative to January 2022. And I'm not going to spend a whole lot of time there. It's, I guess it's useful, but it's, well, I don't know how useful it is. The breakdown of cash sales. Well, in January of 2023, there were almost 4,700 closed sales, which were cash sales, which was down almost 36%. Great. Cash sales as a percentage of closed sales in January, 31.6%, which is a decrease of about 5%. All right, let's keep trucking. Median sales price. Okay, this is where things start to get more interesting, although we did cover it in the first slide. January 2023, up 4%, 389, let's call it 390. I'll round up a little bit, but 390, up 4%. Again, I've been talking about single digit growth, and that's exactly what we're seeing. 4%, 5.6. The days of 22 or close to it, percent, 23%, those days are gone for now. All right, average sales price. Now, this is very interesting, I think, because in December, we saw that there was a downtick year over year of 4%. And I noticed that trend in my market that things were getting a little bit iffy. I did a video talking about the new construction and looking at new builds to see if they were going to start offering incentives in my hyperlocal market, if they were going to um, get rid of the lottery that they had to purchase new homes, meaning you'd have to win a lottery in order to register to buy a home. And would they be doing price reductions? And that was pretty certain that was mid-November that I did that video. Well, since then, and again, this is my hyper local market. I'm talking about Lotus Palm in West Boynton Beach. Very isolated market relative to what's happening in other markets. So if you're in Phoenix, Arizona, this is not going to be your experience. That's just what's happening here in my local market. But I was wrong. I thought we were going to see I was looking for the builder to give me some type of leading indicator as to what's happening with demand. And yes, in December, we saw a 4% decrease year over year relative to December 2022. But they never did those things. Instead, what they did was raise prices and bring back the lottery. So demand was such that they felt it was the right thing to do to create a more expensive product, and they put in a lottery system. So the demand must have been robust. And then in addition to that, they're still aggressively pursuing the opportunity to buy more agricultural or reserve land, which they've been fighting with the city to do that for a while now. But the reason I bring that up is the fact that if they didn't believe that the values of property and homes was going higher, then they certainly wouldn't be spending hundreds of millions of dollars to go out there and develop more land. Because I hope that they have analysts that are smarter than me that can go out there and not predict the future, but point to data to analyze what the best use of their capital is. And for them, it's to redeploy it into building new construction, new developments, new luxury homes, and buyers are buying. So, despite what I may have said in November, none of that came true. Instead, what we got 5.2% growth January 2023. All right, dollar volume. Okay, well, obviously, if there's less transactions, there's going to be less dollar volume. Median percent of original list price, I've already covered. It's at 95%, down 5%. But what is interesting, I think, is to go back, look back in time, go into the time machine when it was 100% all the way down. So from from July 2022 to January 2022, 100%. And I'm actually, well, this is the state level. I know if we get more granular, it will be over 100%. Okay, time to contract, 40 days in January 2023. This is not unusual. What was unusual is 9 days, 8 days, 12 days, 14 days. That's highly unusual. That was the insanity of the market. Those days are no longer here. We are aggressively rebalancing back to a new, not even new, but what a normal market looks like. And so for a house to be sitting on the market for 40 days is not unusual in a normal market. Now, that being said, there are certainly strategies that we use and employ on a regular basis to create a market within a market so that we're not having our sellers wait 40 days. Instead, we price it aggressively, get multiple offers, bid the price higher, and the sellers get what they want. All right. And case end point right now, little test study or not test study, case study, some clients that we're working with this week went out, looked at two properties, and both of those properties that had been sitting on the market, one, I believe, was on the market for 60 days, the other less than that. But nonetheless, when they priced the home the right way, they had multiple offers within 48 hours. And those contracts are bidding against each other and doing the same things that was happening in the insanity of the frenzy. So really, it's critical to work with a listing agent who knows how to price and market your home the right way. All right, time to sale. Well, we already covered that in the first slide, but it's up 46.6%, 85 days. Again, I'm talking about the state of Florida. I have not started to drill down into the micro markets that exist. This video sponsored by Celsius. Not really, but I'm having some Celsius. And you should too. So cheers. All right. Pending sales down 19%. All right. Let's keep going. New listings down almost 5%, 26,000, a touch over 26,000 new listings in January 2023. You saw a dip here in December, a little bit of a dip in November. Some of that may have been due to seasonality. At least I would say that's true for December. But again, we got 26,000 new listings. Active listings up 134%. That is a big number, big number. And if you look back to March or February or January of 2022, you can see decreases, while conversely, now you see massive changes to the upside. And that's going to continue to be the case. There's still a shortage of homes for sale relative to, so supply and demand, economics 101, there's still more demand than there is supply. And so when that's the case, prices appreciate. Months supply of inventory, 2.8 months. I believe that's the highest figure over the last year, but I thought wrong. It's tied with November, so up 180%. Month supply continues to uptick, and I expect that will continue to happen as we go into 2023. Now, I'm still very curious. What's happening with distressed sales? Are there any? Stay tuned. We're going to find out. Closed sales by price. Okay, so this is a breakdown of the sales that happened within different price brackets. I'm not going to spend a lot of time here. I don't want to insult your intelligence. Everybody knows how to read. And what you can see is that all of those percentage changes are negative. Time to contract by sales price. I'm not going to spend any time here. It's taking longer to go under contract. We've covered that already. And new listings by initial price. Well, there has been it's very interesting. So there has been a downtick in the price points that exist from 0 up to 400,000. And then there has been an uptick percent year over year as far as new listings go, from 400 up to 1 million, but a big jump at 1 million plus. So hopefully you can see that. So interesting, something we want to keep track of. But yeah, there are a lot more $1 million homes that are going up on the market, and that's evidenced by those numbers that you see. All right, inventory by current listing price. Interesting. So the lower price points, 0 to 150, are down and in the negative. From 150 up, it's an ascending. Oh, that's not 100% true. We got a little bit of a dip here over $1 million. But what you can see is there's an uptick in most of those brackets, an exponential uptick in those different brackets. So let's keep on trucking. This is the one I wanted to see. Let's go. Monthly distressed market, January of 2023. How many foreclosures, how many short sales were there in the entire state of Florida? And during the great financial crisis, that period of years, the number was something in the neighborhood of 18 million distressed sales. Right now, or excuse me, as of January 2023, there were 95 foreclosures or bank-owned properties, which was down 3.1%. So that number isn't growing, it's shrinking. The sales price on that was down 8%. Closed sales for short sales, down 55%. And the sales price on those short sales was up 10.2%. So I've talked a lot about when the bottom will be in, or how you know when the absolute bottom will be in. And I'll be the first to tell you that I am not a good market timer. I will never call the absolute bottom. I will never call the absolute top. I'm just not that smart. And for the record, neither is anyone else. Nobody can perfectly predict those things. They may get lucky. You may be Michael Burry. You may, well, I think that's a unique situation. He's a genius. He called it right. Congratulations. But I'm no Michael Burry. I'm Chris Igoe. And so I'm never going to get that right. But I will be able to tell with a fair measure of common sense that when the pain of recession or the fear of job loss or whatever the pain point might be causes enough pain, then homeowners who have equity, which is basically everybody, they're going to tap out and get that equity. They're going to sell their home. So it's going to take a long time for the short sale or the foreclosure sale or the distressed market to even be a blip on the radar, which right now it's not even a blip on the radar, but it has to happen at some point if the recession and if the pain becomes unbearable enough. And when that happens, that's when the bottom's in. But until that happens, the bottom's not in. And also, there are other black swan events that could potentially happen that I can't possibly predict, which is why they're called black swan events. But if a nuclear bomb blows off in some part of the United States, well, then we got bigger fish to fry, and paying your mortgage is probably not going to be the number one priority. Survival will be, but this is not to be too morbid here. But I don't see any nuclear bombs going off anytime soon. So let's just stick to the script, which of course is the Florida housing market crash canceled? All right, so that's the state. Let's go into the metro area and let's see if I can get this right. Oh, all right. So I am going to stop that screen. Whoa, we got 50 people watching and there's all kinds of comments. That is amazing. Okay. What's up, Kush, Sean T, Dom, Lubra, Kevin, upstate New York. You guys rule. Thank you for watching. I appreciate it. And if you haven't yet, please hit the subscribe, hit the like button. It does a tremendous amount to help me with the algorithm. And I want to get this content in front of as many people as I can so that I can help serve and support them at the highest level and get them what they want, irrespective of market conditions. All right. So let's go into the next slide, which is Miami, Fort Lauderdale, West Palm Beach metro area. And as you can see on that picture, let me blow this up a little bit big. Whoa, hey now. All right, so you see the gigantic map of Florida, which, as we talked about, is 66,000 square miles. This blue section is Palm Beach County, Broward County, and Miami-Dade County. So let's get a little bit more micro, understanding that, of course, each market within them will trade differently, will have different intensity, will have different types of buyers, but this is the single family home housing numbers for all three, the Tri-County area. So for January 2023, closed sales down 37, let's call it 38%, right? Relative to January 2022. Cash sales down 30%. Median sales price up 7.8%, almost 8%. So the affordability issue that exists in the market right now continues to be an issue and will continue to be an issue as homes trade higher, as the supply and demand balance stays out of whack. There's just not enough homes, or as you get into certain different markets, you'll experience the fact that there are certain products that trade very, very differently and have much higher demand than other markets. Nonetheless, for this region, median sales price is up to $555,000, which again, when you look at the average sales price, the median becomes somewhat pointless because it's not, although yes, it is the middle number of the range of the numbers that exist that they're looking at, the average sales price gives you more information, and that's up 10%. 948,000. Dollar volumes down. Well, that's because there's less closed sales. And the original median, no, I said it right. I don't know how to talk or read today. Median percent of original list price received, 94%, down from 99. So a decrease of 5%. Time to contract up 110%, which seems like an alarming number, seems like a shocking number. 40 days to go under contract is not a shocking number, at all. It's a normal market. So we continue to aggressively rebalance in that space. Time to sale, similar to the state, 83 days, up 29%. New pending sales down 23%. New listings down 5%. There are not enough homes for the buyers who want them. Pending inventory down almost 32%. Active listings, the ones that are your competition if you're thinking about selling, and the ones that are your options if you're thinking about buying, was up 102%. Oh, I mean, over a double. 5734 up to 11,620. Months supply of inventory for the Tri-County area upticked from 1.3 months to 3.4 months. Still a seller's market, trending towards neutral. But I can tell you with hand to God that markets within this market trade very differently. There are markets that have significantly less than 3 months of inventory. And separate to that, there are markets that have significantly more than 3 months of inventory. Really just depends what you're looking for, what type of product, where you're shopping, and the condition of that home or property. Closed sales down 37%. Okay. Let's see here. Percent change year over year, looking back in time. All right. So down 37, 41, 37, 26, and a partridge in a pear tree. With the exception of January, which was up 1%. All right. Cash sales down 30%. I'm not going to read too much into that. It's just what it is. But you can see back in March, February, and January, there was an uptick. And for the most part, it's been downtick city for cash sales. Cash sales as a percentage of closed sales upticked to 12.5%. Excuse me, upticked by 12.5% to 36%, 35.9 to be exact. And we're going to keep on trucking. Median sales price. Well, the days of the 18, 19, 24%, those days are over, but we're at 8% appreciation for median sales price. Again, single digit growth, high single digit growth, but appreciation, period. Not a crash. So the housing crash brothers that exist out there and the content creators that are out there that are trying to scare the bejesus out of you, telling you that there's this massive foreclosure wave or whatever that may be is coming. Well, as evidenced by what the numbers actually say in January, there are none. So doesn't mean that won't happen in the future, but to give you a timeline on what that looks like, if you stop paying your mortgage today, it's going to take 18, 24, 36 months, depending on how savvy you are, before you get evicted. So it's going to take a lot of time before the bank takes possession of that home, which, again, I am not Nostradamus, and I do have common sense. I know at some point the pain will be sufficient enough to drive that distressed sales market. It's just not today, which is what it is. And full disclosure, I would love for the market to crash. I would love for there to be a fire sale. I would love for the market to go down 30%, not as a homeowner, but as a buyer. I would love to be able to go out there and build a bigger real estate portfolio. And I will do that when those things happen. But in the interim, we got to make hay while the sun's shining, and we got to max out South Florida living to the fullest. So I've had conversations with people as early as today who are talking about the possibility of buying properties and interest rates and their concerns, which I understand. And I will never, ever in a million years apply sales pressure for somebody to do something that is against their best self-interest. I will never do that. I will share all the information so that they can make the best decision for themselves, for their family, and for their financial bottom line. But if we look at the volatility in the interest rate market over the last couple of weeks, and you see it's spiking higher, I am on the record. I've gone out there and talked about 10% interest rates. I haven't changed my tune on that, although I was wrong when I said that. They went down a point. I think we were at 7%, and then it dipped back down to 6%. So my timing, and I mentioned I'm not a market timer. I'm never going to be able to time that market, but I do know that over time, we're likely to go back to a historical norm. And many of the affluent buyers that I work with who are a little bit older remember when 6 to 8% was normal. 2% is abnormal. 3% is abnormal. But most of those buyers are not really sensitive to interest rates, which, of course, is not everybody's situation. I understand there are lots of first time buyers and lots of move up buyers that are very interest rate sensitive. But at the end of the day, I can't control interest rates. I can only control what I can control. And what I can control for today is sharing the information with you so that you know exactly what's happening. Now, as far as interest rates go, and I know they uptick today. I don't know what the most current rate is as of today, but I do know if you got bad credit, it's over 7%. So okay, you've got 7% interest rate or an 8% interest rate, and the market dynamics are such that we can negotiate a deal. Well, for one, we can negotiate price, which is a big deal. And separate from that, we can negotiate closing costs and an interest rate buy down. And depending on, and this is on a case by case basis, depending on the pain point and the motivation of the seller, we've got far better leverage to be able to do things with interest rates to bring them lower than whatever the current market rate is. But it is critical that if you're thinking about buying, you speak to a lender who is savvy, who will help you run the numbers so that you know exactly what they are. Because the last thing I ever want anyone to do is buy a house, be house poor, be unhappy with the decision, have buyer's remorse. I don't want any of that. I want you to get what you want, and I want you to know what you want and have total crystal clarity as to what the financial obligation is. And if any of those things don't line up, I'm going to tell you not to buy the house. All right. Dollar volume down 31%. Well, there were a lot less closings, so of course that number is going to be down. Median percent of original list price received, 94%. Well, back in June through about January, it was 100%. And I suspect as we go into the more micro markets, you'll see over 100%. But as you can see, we've the 100% days are over for now, at least in this metro area, the Tri-County area. All right. Woo, that was too fast. Time to contract, we already know 40 days. Gone are the days of 14, 13, 11, 12, 17, 19. Those days are over. So 2 weeks to get under contract, unless you price the home the right way, is likely not going to happen. And these numbers are skewed because there are a lot of overpriced listings. Time to sale, 83 days, up almost 30%. It is what it is. It takes longer to close. And that's that. All right. New pending sales down 23%, almost 24%. Got to round up over 0.5. We bump it up. All right. So 3,404 sales, January 2023. New listings down 5%. Interesting. So I wonder what that's a function of. Is that a function of people being in their home and recognizing that, oh, if I have to sell this home, I may have to pay. If I have to sell my home that I'm in right now, which has an interest rate of somewhere under 4%, do I really want to go out there and buy a home when that's going to bump me up to 7.5%, 8%? Is that something that I really want to do? And the overwhelming majority, or at least 4,282 people, disagree. But most people don't want to sell their home and trade up into a higher mortgage payment. I don't blame them, which is why it's critical that you work with somebody who knows how to negotiate an interest rate buy down to get it into something much more manageable that you can live with, that you're happy with. Because the truth is, let's just play the game of you buy a home and the market goes to zero tomorrow and you're in at whatever percentage rate you are in at, right? Well, you bought the home, you were thrilled with it on closing day, you thought you got the best deal possible, you're happy with your interest rate, you're confident in your financial future, so you're not worried about job loss or anything like that. Your economic condition is intact. Great. The house that you bought, I'm making up numbers here and playing a role-playing game. You bought $1 million home. And the day after you close, it's worth 500. Your neighbor does some crazy thing. They're in trouble. They fire sale the home for $500,000. Well, that just reset the market. And now your home's worth 500. If you sell, if you don't sell, then that equity loss, which is not real, it's on paper, is never realized. So you didn't actually lose anything. And the next question that you need to ask yourself when thinking about buying is, What is my timeline in this home? Because I mentioned before the distressed market, there is none. And I suspect there will be one in the future when the pain of recession becomes sufficient enough to cause distressed sales. What's that timeline look like? I don't know, 2, 3, maybe 5 years. Well, if your intent is to be in the home for 10 years, chances are by the time you closed on that $1 million home, which next day was worth 500, 10 years from now, it's going to be worth more than you paid for it. Why? Because there is no more land in South Florida, at least. Again, got to be clear. Right now, I'm talking about the metro area of Miami, Dade, and Palm Beach County. And I'm talking about Florida. So I'm going to go more micro as we continue. But what's happening in my market is not the same as every other market, period. So know that. And separate to that, in my hyperlocal area in South Palm Beach County and Broward, there is no more land to develop. We're bordered on one side by the ocean and on the other side by the Everglades. There's a scarcity of resource. So there's only so many homes that we can build, period. And then there is no more. So that scarcity of land in some ways insulates us from other markets. And the truth is, there are more people who are reaching out here on a regular basis who want to be in Florida for all the reasons everybody wants to be in Florida. And that's not changing anytime soon. But yet to be determined. I don't know. DeSantis may run for president, and then who knows what happens. But as for now, Florida is very pro-business, very wide open, very free, lots of tax advantages, et cetera, et cetera. It doesn't snow. And news announcement, breaking news. If you buy a home with me in Florida, I do offer free snow removal for life. So if that's something you're interested in taking me up on, you know where to find me. All right. So active listings, inventory, January 2023, up 102.7%. Let's just call it 103. A little bit over 11,000 new lists or active listings, excuse me. Month supply, 3.4 months, which is the highest number we've seen since November in the last year, right? Now, during the great financial crisis, that month supply number was 20 months. It was 30 months. It was significantly higher than 3.4 months. And that, those dynamics may play out in the future, especially if there are distressed sales. My rebuttal to the distressed sale question would be and what's different this time as far as distressed sales are concerned? Well, I understand the economic pain that will have to cause these dynamics at some point. What didn't exist then, but does exist now, is there are major institutional buyers that are prepared and waiting and have powder dry that will gobble those things up. So I suspect much of the bank-owned properties or the REO market or the foreclosure market, and I don't know how it would work with short sales, probably not, but these people are creative. There will be a way for them to slice, dice, and create an opportunity to package these things and sell them to an institution, which I'm not wearing a tinfoil hat. I'm not making that argument, but that is a major difference between today and, yesterday. There are lots of institutional buyers that will very likely remove that opportunity for the retail buyer or for the regular buyer. All right, let's keep going. Closed sales by price. And this is just a breakdown of what the numbers are in each price point, but you can read it. I'm not going to spend a lot of time here because we have a lot of ground to cover still, and I appreciate that you are still with me. I hope you find this content valuable. All right, time to contract by sales price. It takes longer to go under contract. We've covered it. And new listings by initial listing price. Interesting, similar dynamic as the state, but the percent change year over year is down up until you get to the 600 price point, and then it's an uptick of 19 and 21%. So interesting. Those higher price points have more listings relative to year over year. Inventory by current listing price. Whoa, there's a lot of inventory. So $1 million plus, 117% to the upside, 600 to 999, 183% uptick. 400 to 600, a 94% uptick, and so on and so forth down the line. And you can see what that is. And now, the thing you've been waiting for, the distress sales that are going to be the linchpin for the crash. Right? Maybe. I don't know. Wrong? Yet to be determined. How many foreclosures? 17. In the Tri-County area, there were 17 foreclosures, down from 25. So there were 32% decrease, downtick in foreclosures. And the price on those upticked by 8% to 427. Short sales down 56%. So we're not seeing an increase in distress sales. We're seeing a decrease in distress sales. So what's going to be the catalyst that takes the air out of the appreciation balloon? Yet to be determined. I don't know. I'm not an economist, but there are lots of things that I can talk about as being potential catalysts for that meltdown. What one of them is not, at least not for now, is distress sales. And that's the most obvious one. Of course, Bitcoin could be a scam and crash, and let's see how that would impact the rest of the market. Wait, that already happened. Thank you, Sam Brinkman, Freed, SBF. It doesn't matter what his name is. All right, so that's the metro area. Let's get a little bit more granular. And wowzer, we got 61 people watching this live. I appreciate all of you. You guys rule. Thank you so much. Now let's get into South Palm Beach County, which is more of my, how do we do this? Stop this screen. Woo! All right, as we transition, I'm transitioning to the next slide. All right, so we are going to South Palm Beach County. All right, January 2023 number for South Palm Beach County. And I got a comment from someone who, this was a while back, who said there's no such thing as South Palm Beach County. Well, yes, there is. And there's also a North Palm Beach County. But putting that to the side, let's get into the numbers. So single family, this again is a section of the market, right? I'm not going to go into everything because we will be here all night and I respect your time. I will be brief, or at least as brief as I can, while still giving you the maximum amount of information. But single family homes, closed sales in South Palm Beach County, down 36% relative to January 2023, right? Median sales price up 12%. Here's the effing whopper. Average sales price, January 2023 compared to January 2022 is up 49%. Sweet mother of God, 49%. That is insane appreciation. And again, I'm still at a macro level. I have not, well, macro relative to the micro markets, but micro relative to the state. But 50% appreciation is shocking. And I don't see appreciation slowing. I see it moderating. I see it reverting back to single digit growth. And I suspect we're going to see that trend confirmed as we go into these other markets. But 50%, 50% appreciation is not sustainable. Okay, percent of original list price received is down 7%. It is 91.2% compared to 98%. Affordability index is down 31%. Well, I don't exactly know what the index is comprised of, but it doesn't take a rocket scientist to know that if the average sales price is up 50%, well, then the affordability index is less affordable. And that's what we're seeing. Time to contract up exponentially, up 245%. But we're talking about, I lost my, 38 days. 38 days is not a long time. 38 days is a return to normal. That is not, 11 days is ridiculous. That's unsustainable. That was the frenzy of the market. And barring the interest rate market or the mortgage interest rate dropping down to 3 or 4% or under, I think there's very little chance that we see anything like 11 days to contract, unless you price the home the right way, create a market within a market and get multiple buyers who bid the price higher. And then that will be less than 11 days, but not every real estate professional does that. Okay, pending sales down 20%. New listings up 2%. Inventory of homes for sale up 83%. Months supply. So again, 6 months buyer's market, under is a seller's market. 4%, or excuse me, 4 months would be neutral. We're at 3.3 months. So we're still in a seller's market, nowhere near as aggressive as we were in the past last January at 1.3 months, but still a seller's market, which is definitely not what you want to hear if you are thinking about buying. But I'm here to tell you the truth, not what you want to hear. Okay, from here, let's go to Boynton Beach and see what the numbers are, because the numbers don't lie. Only me. I'm the only one who lies. And I'm telling you the truth. Okay. Let's see. So Boynton Beach, where are you? Here we go. Boynton Beach, let's go. All right. So Boynton Beach, the city that I live in. Again, Boynton is very different in different markets. So anything coastal, you will pay a premium to live that coastal lifestyle. Anything central is probably going to be a little bit older and need a little bit of TLC. And anything out west is going to be newer. It's going to be, for the most part, planned communities, resort style gated communities with HOAs. There will be fees. It is more expensive and it is very nice. But if you look at Boynton Beach overall, you might not necessarily understand what the market dynamics are in each one of these hyperlocal markets. But don't you worry, I'm going to go a little bit more micro right after this, and then we're going to conclude. So we will have covered all the bases. Closed sales in Boynton Beach down 37%. Median sales price up almost 10%. We are at $516,000 for the median sales price. Average sales price is up 13.5% at $582, an uptick from $512. Dollar volume's down. Of course, that's going to be the case when closed sales are down. Original list price, percentage of original list price received, down 6%. It was 98.8. It's now 92.5. If I had a dime for every listing agent that overpriced their listing, I would be a crazillionaire. I just made that up, a crazillionaire. Write that down. Very important. I'm going to quiz you on it later. Crazillionaire. All right. But nonetheless, 92.5%. Is that a function of the market, or is that a function of listing agents that don't know how to price homes? I suspect it's the latter. Median time to contract, 49 days, 188% uptick from 17. Pending sales, down 20%. New listings, down 0.5%, a half percentage point. 215 new listings versus 216. Inventory of homes for sale, big uptick, 121%. Let's call it 122%. And month supply is up 180% at 2.8 months from a month in January 2022. So big jump, but still putting things into perspective. Yes, there are more homes for sale. Yes, it's taking longer for them to sell, and it is still a seller's market. So that's what it is. But you may be wondering, Chris, what's happening in your hyperlocal market of your zip code, which primarily covers the Canyons enclave. So Canyon Trails, Canyon Springs, Canyon Isles. Let's see what that will reveal, because everybody wants to know. And I will cover other markets too. Not today. This has already gone longer than I expected it would. But in the future, I will continue to pump out the housing market data for all of Florida, all of the metros, whatever micro markets you want me to cover. But I will 100% share all of that information, because it's critical to know if you're thinking about buying or selling in any of those markets. And while I do not serve and support anything outside of my hyperlocal market of South Palm Beach County, I absolutely know incredible professionals who can help serve and support you at the highest level in any of those other markets. So if that is something that is beneficial to you, then please reach out, because I will connect you. And to be clear, these are people I know, like, trust, and have done business with in the past. I'm not going to just pawn you off to anybody, because that would not be cool. All right, so let's go to stop screen and share the final. Here we go. Boynton Beach. So this is my zip code, and what you see over here on the left-hand side underneath the Boynton Beach zip code is the area that covers, and so this is, again, only single family homes. There are 55 plus communities that are part of this market. There are other communities that are part of this market, but the Canyons Enclave is primarily um, well, actually, all of the Canyons Enclave is in this zip code, but there are other products, older neighborhoods, and the 55 plus buyer is different than the families that are typically buying in these other neighborhoods. But the pricing in those neighborhoods is different, so it doesn't necessarily. Long way of getting to the macro picture for this zip code is not instructive if you're looking in one of these individual neighborhoods that exist within it. So it is critical, and I'm not going to go into what all of those are because we literally will be here all night. If you want to know what that looks like, then please reach out and I'm happy to help. But it's similar to this. This is close enough for now. So January 2023 in my zip code, closed sales down 40%. There were 6. Median sales price up 7% at 857. Active inventory in January 2023, 517% uptick, 37 homes. Dollar volume obviously is down because closed sales are down. New listings are up 138%. Again, this is January, so the seasonality of December is waning, but there were 19 homes for sale, and pending sales are down 13% with 13 new pending sales. But Chris, we want to know more. Okay, I'm going to give you a little bit more, and then we're going to wrap this puppy up because I'm having way too much fun here. Let's look at 58 people. Holy crap. That's a lot of people who have watched me talk for an hour. I appreciate you watching. Let me look at some of these comments here. What's up, David? Total Pro Cleaners, Miami. Let's go. Algosaurus. Okay, isn't the hurricane's damage to these millions of homes the reason to blame for the current conditions? No. The real question should be, how would this market look if Hurricane Ian hadn't destroyed homes? Hurricane Ian had a significant impact on the people who were impacted by it, right? So I don't want to minimize what happened to those people who lost whatever they lost, right? That is horrible. That is a tragedy. How much impact did that have on the local market around it as far as the housing market is concerned? Almost no impact. That's the truth. I'm sure there are content creators out there that will tell you that the hurricane is going to be the end of Florida, but everybody knows Florida is in Hurricane Alley. And despite the insurance issues that exist in the insurance market in Florida, there's insurance. So again, let me put it this way. I will do a deep dive on the state of the insurance market and the fraud and the legislation and the changes that are happening with one of my close friends who is in that space and certainly better versed than I am at it. But I do want to address and answer all of your questions that exist around home insurance because it's very important. Home insurance has certainly gotten astronomically more expensive, and we're also seeing contrary to what I forget the guy's name is, or whoever, it might have been a woman. I don't know who, I don't remember who left the comment, but they gave a deep dive into their experience with the home insurance market and their concern for people who were impacted by some of the fraud that happened and all those things. That comment is not my experience. So I don't want to challenge it or rebuttal it, but I would like to speak to an expert either on a live stream or do a content to share exactly what is happening, because there are lots of changes that have happened. There are lots of changes coming, And my suspicion and my contention is that more competition coming back into the space brings pricing for home insurance down. They seem to take umbrage with that statement. But that's my position as of now. But I have an open mind. I'm certainly happy to talk to an expert who can give me more context and shoots from the hip. So he'll tell it like it is. And that's where we're at. Okay, what's up, Kirsten? 7% today. Yeah, no bueno. And if your credit's bad, it's probably 8.5%. Upstate New York. Let's see, Kevin. I think I gave shout outs. My main function right now is to give shout outs to everybody who's watching. So, what's up, GMW? What's up, Eric Medina? And what's up, Silvio? Let's go. All right, so here we go. We're rounding this puppy out. We're going to wrap this up strong. We're going to go even more micro. So we talked about my zip code, but I think we can get a little bit more detail, and that is what I want to share with you right now. So let's do it. Okay, let's present. Let's share. Share screen. Where are we at, baby? Trend graphics report. Okay. So this is my zip code. This is more current data than the January data, which is now a month old because it's February 21st, right? But one of the things I like about the data that I pay a premium for from Trend Graphics is that it gives me more information. So I can get a snapshot of what the beginning of February looks like relative to the rest of the market. And I think that is critical information to know, especially if you're thinking about taking action right now. This is the most current information. So the average active sales price in my zip code for the beginning of this month, which is not part of any of the other data that was already shared, it's up 8.3%. Now, is that a function of overpriced listings? I don't know. Yet to be determined. I suspect yes, but until I get into rapport with, or until I actually look at the home that you're thinking about buying, I can't really give you accurate information. The average sold price so far in this period, again, we're talking right now about February up until the 20th, was up 11.8%, almost 12% in terms of sold price in my zip code for the beginning of this month. I talked about single digit growth. Now, there's about how many more days left? Roughly a week left in the month. It looks like, I will be wrong. It looks like that we're trending to double digit growth in in February in my hyperlocal market. So although I predict single digit growth, it looks like I'm wrong. It looks like 12%. Yet to be determined. I don't know. And of course, we'll cover it moving forward in the future. Okay, so that is the most current data. The rest of this really is just a breakdown in a different way of looking at it. So I'm not going to spend much time with it. But what I do think is interesting, it gives us a little bit of a market highlight and summarizes this probably more succinctly than I just did. But what does January 2023 look like? Well, it looks like the market was neutral. And average for sale price was up 4%, which again, for sale price is not where it's sold, right? It's where it's listed at. The average sold price up 13.6% compared to last month and up 18% compared to last year. And months supply of inventory is 5.7 months. That is a buyer's market. That is the biggest number that we've seen in a long time. What is interesting is that I'm working with some affluent buyers who are shopping in a different market. So this is a completely different type of buyer, a totally different product, a totally different market. But they're looking for something either walkable to Meisner Park in downtown Boca or on the intercoastal in downtown Boca too. So living that coastal lifestyle in an area that's referred to as the Golden Triangle. And there has been a ton of development in that area from investors and developers who went in, bought the older homes, knocked them down, built something modern, luxury, and expensive. And while we were shopping in that market and we were running some of the numbers, it was shocking to me that I noticed that there was something close to 36 months of inventory in that price point. So these dynamics change radically depending on where you're shopping, depending on the price point you're shopping for. These things are never static, they're always dynamic, they're always moving, and you must work with someone who knows what they are in order to be able to advocate for you at the highest level. So that's going to wrap it up. So all 47 of you, I love you. Thank you for watching. It's a great night, and check out my next video because I suspect you'll love it a lot. And actually, there is no video link to this. This is a live stream. But I will cover the rest of the metro areas, and you can expect to see more Florida housing market data throughout the state as we get into the next few days, few weeks, and certainly within the next month. So if you have a request of areas that you'd like to know more about, either leave them in the comments or shoot me an email, reach out however you want, and we'll get it done. And that's it. Have a good night.